Hello, everyone, and thanks for taking the time to review the Morgan Hill Real Estate Market Analysis for June 2008. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. And I'm also very excited and pleased to announce this month that I am also now the president and CEO of Whitelaw & Sons Real Estate Services, the best real estate company in Silicon Valley, ready to help you with any of your buying and selling real estate needs. Now, to celebrate the creation of my new company, I am happy to offer a 25% buyer rebate. Now, this offer is available until August 31st, 2008, but the good news is you don't have to actually buy before August 31st, 2008. You just need to contact me for more information and to arrange reserving your 25% rebate when you purchase a home. Now, when you do purchase a home, you will get 25% of the stated commission for the buyer's agent rebated back to you. Now, to reserve your rebate, call me at 408-852-0525 or contact me via any of the messages that I lay out for you at the end of this presentation. Now, let's go ahead and take a look at the supply and demand numbers. Now, first, we are going to take a look at the inventory, as we always do. These trends are actually pretty good. I know we're at the high end of this, but again, just like last month, notice that it looks like we're starting to top out here. That is very good news for us, particularly in a market where we've been suffering for quite some time. Now, the inventory is actually up 8.9%, not nearly as much as it's been up in previous months over the last year. So while it's still up, it's not as bad as we've had to deal with in the past. So that is very good news. Remember, these are numbers going back the same month of the month of June, going back different years, so that we're comparing the same time of year to the same time of year. So there's no seasonal influences here. That gives us a grand total of 329 homes currently on the market. And if you'll notice, it's very clear to see on this particular chart the rate of change from 2005 to 2006, huge inventory jump. 2007, another big inventory jump. 2008, it's slowing. So that's good news for us. At least it gives us some sort of a light at the end of the tunnel. Now let's go ahead and look next at the number of homes that were listed. Now this year compared to last year, we actually have a nice big drop in the number of homes listed. We're down 32.7% from last year, which is great. Fewer homes entering the market is a good thing. That gave us a grand total of 72 homes listed in the month of June in 2008. Now, as far as sales are concerned, it's actually more good news for Morgan Hill. We had an increase of 13.3% in the total number of homes sold in Morgan Hill in June of 2008 when compared to the same time last year, which gave us a total of 35 homes sold. Again, really good news for the market. And, you know, some of this news is good enough that it actually leaves me a little worried. I'm not real sure what to think of some of this. You'll know why I'm saying that, and then see the next couple of slides. But now, if we do the math a little bit, the number of months of inventory available, and what that basically means is if we froze the inventory numbers at what they're at right now, and the number of homes per month froze at what it's at right now, it would take us 9.7 months to get a home sold. Now, I know that sounds like an awful lot, and it's definitely higher than I would like to see it, but when you realize that last month, that same number was at 17.5 months, you can see we've had a really big change in how our market is performing in the month of June. We're actually getting our summer season. It's good to see. And because of the momentum we've got here, we may actually see it extend beyond what we saw last year, but we'll get into that in a few minutes. So 9.7 months of inventory. Another way to think of that is for every home that sells, there's about 9 or 10 homes on the market. Much better than what we've had in recent months. Now let's go ahead next and look at supply and demand. Just going back months now. Now this is going back to March of 2007. Take a look at where we are here at the far right end at June of 2008. We've got a great sales boost of, get this, 78.9% increase in sales between May and June. That is fantastic. That rivals not only last year's but also performance. Some of that's up there with the best months we've seen. We've also seen a decrease in the number of home listeds. Again, that is fantastic news. And it's a big dip, and we'll point out why that's more important in a second, but it's a dip of 27.3%. Inventory down 1.5%. And again, that's a significant number, and we'll talk about that right now. Now, the reason we use this, the reason I even present these particular sets of numbers, is to give us some context in the short term, where we've been, where we're going. Let's start with where we've been. Take a look at that buildup in inventory from March 2007 to June of 2007. A steady increase, no denying it. Look at that same time frame, March to June of 2008. We're seeing a completely different story. We see a little bit of a boost between March and April, flattens out between April and May, declines in June. That is fantastic news. Last year, the inventory peaked in June. Now we're seeing a decrease, but an increase in the sales. That's excellent. Now, so inventory, good news for us when comparing the context of the months we're in. Good news for us on inventory. Now let's look at number of homes listed in the month. Now we can see we've had a decrease from month to month from May to June, but last year we had a decrease as well. But look at the difference in the decrease. We got a much bigger decrease in the homes listed between May and June of last year than what we got this year. We've far fewer homes, bigger drop. So that's good news. Far fewer people, and the trend is that people are listing their home in fewer numbers more quickly. Now, the next good number, June sales numbers. Obviously great compared just to the last couple of months, going all the way back, all the way back to last summer, frankly. But look at the comparison between the months before it. Look at March to June of 2007. We actually saw June sales, volume of sales, at its lowest point by that time in the year. In other words, if you looked at March to June, the lowest month was June. This year, completely opposite story. Big sales month for June. That's excellent news. Now let's take a look at after now. What can we expect in future months if we can take last year as any indicator? Well, and you know what? My faith in last year as an indicator isn't so good. I think we're seeing a lot of changes in trend here, and as I've always pointed out in the past, I want to know why that is. This feels like a pivot point to me, just like in 2005 and early 2006. We were talking about some of the scary pivot points we were seeing as far as inventory numbers and drops in sales and all these things. These are the kinds of numbers that are pivoting in the other direction. So I'm encouraged by this. The inventory numbers, I think, are particularly encouraging. If we can keep that trend up of the inventory going down and sales going up, we're going to see some good numbers in the next few months. My hope, now last year you can see we did not really get much of a summer season. Sales stayed flat after June and then just declined once we hit September. We've had such a great June on the number of homes sold, and we're seeing other numbers that are looking good as far as inventory and listing is concerned. I'm optimistic for July. I'm not sure we're going to see a decline in July. We may see this number stay flat or even go up a little bit. I think overall we have reason to be happy about where we are, but I think we also might have some reason to be optimistic about where we're going to go in the coming months. So we'll keep our eyes on this number. No matter how you slice it, it feels like a change just because of the things we've seen, the trends we're seeing. Again, we'll find out if we're right or not in the next few months, but I think this bodes well for just the long term going forward. And I'm not going to hang everything on a couple of months' data, but it's all very good news. Now, let's go ahead and take a look at home prices. This one has got me a little confused. I'm not real sure what's going on with the higher average sales price. Sales are up, inventory is down, number of homes listed is down. Frankly, if just seeing those numbers without seeing the home prices on this particular page, I would have expected home prices to either be flat or still be going down. So let's take a little bit more of a close look at this. And first, let's get the numbers out. First, the average home price from 2007 to 2008 for the month of June is up 7.5%. That's a pretty amazing increase. Now notice, median is not up. Median is down. Now that's why I like to include the median number in this data, because it gives you an insight when you get something, a little blip like this that goes up so high. It really it helps put you into context. So what we're finding is that while the average price of a home has gone up, the majority of the homes that are selling are actually below the average price we saw last year. So the majority of homes that are selling far below that higher average price. But I've gone back and looked at this. This wasn't because of $5 million house that's sold. We had a couple of $2 million houses and several $1 million homes sell. But what that's telling me is that what we're seeing is just more movement at the higher end, which is good news. So all around this is good news. Don't take this average price as, wow, suddenly I can increase the average, what I would ask for my home by 7.5%. That just isn't borne out by the numbers. But the good news is that folks who own homes that are at that higher echelon are starting to see sales. So I wouldn't consider this a increase in average sales price on a home-by-home basis. I would say to this number, sellers at the higher end now are seeing a little bit more buying occurring at their level. So all of the average levels, I would say, are about the same as we've seen over the last few months for folks. But now we can add to it that the higher end homes are starting to sell again. And that's been a huge problem. We've had it in the areas where homes tend to be over $1 million, Holiday Lake Estates, Jackson Oaks, and other parts. There's plenty, Coyote, there's plenty of communities that know what I'm talking about, that understand the price range I'm talking about. Those folks might see an increase because we've seen areas like that where homes have not sold in those communities in months. There's several communities where in the last 6 months only one home has sold. So this is less. Everyone in the city should start celebrating, and more the folks at the higher end can say, well, good, there are more buyers now coming out buying the higher end properties. Okay, so now the average price was $898,229. That was a dollar change up of $62,318, and the median price was $807,500. And the majority of the homes that were sold were below that amount. Okay? Now, the median change was actually down 2.1% from the same time last year. So let that temper any enthusiasm you've got, as we discussed already, for that average sales price. And the median dollar change was actually down $17,000. Now, the highest priced home was on Reynolds Drive in Morgan Hill, and that sold for, its original list price was $2,399,950, and it was on the market for 111 days. Another good illustration of the fact that the reason we're seeing these higher average prices is because these homes that are at the higher end have been on the market for an extremely long time, but now we're seeing some buyers coming out. And this isn't a unique one. There were several homes in this ballpark that were $2 million, close to $2 million that sold. So this isn't a statistical anomaly per se. Just lowest priced home was on 189 Bender Circle, and that was $448,000. And the original list price was $469,900, and that was only on the market for 43 days. Now, the average price per square foot for homes that sold was $330.48, up from last month's $324.53. Now, the highest list price right now, so let's take this and kind of try to put it in the context. These are the homes that sold. Let's talk a little bit about how the numbers are trying to get sold on the market. Now, the highest listed home is on McDonald Lane, and that's $4,350,000. The lowest price home is on Audrey Drive, and that's $199,000. The average price per square foot is $392.50. That's a pretty substantial disconnect between the average price per square foot of the homes that sold and the homes that are listed. So that still indicates there's an awful lot of really high-end homes that are out there in the market. That home at McDonald is a really good example of a high-end home on the market. And so I think what we're seeing is that our inventory still has an awful lot of homes at the high end that need to move. As I said, the price per square foot for the active homes was $392.50, and the average asking price is $969,801. So again, we've got a market that's got some homes weighted at the high end, where we're seeing a little bit more movement now, but still plenty out there that are affecting also what's. All right. Now let's take a look at these same numbers going back just months, and again, an amazing jump in June, reflected more by the fact that we've just seen a lot of homes at the higher end sell this month that have been on the market for a long time. The percentage price change was up 26%. Average price of a home up 26%. Again, don't start running in the streets with these numbers, but I mean, that's a good thing that we're selling those homes at the higher end. There's more buyers out. The median price change was up 21.7. So even just in the short, that median number in the short term tells us that there were still a lot of homes focused at the low end of the spectrum, but still the higher priced homes in general, maybe not even at the extreme high end, but the high medium end, the middle to upper ones, those are also selling as well because the median rose so very much. And then remember, there were total number of homes sold of 35. If you just figure out the dollar amounts of these increases, and this is crazy. I had to recheck these numbers several times. Up $185,263 for the average sales price of a home. Up $144,225 on the median. So dramatic increases this month. I checked these numbers 2-3 times because I just couldn't believe how much they'd increased. Excellent news. Now, let's go ahead and look at the days to sell. And for that, we can see that this is an area where we're still seeing the sort of performance we've expected in the past. These numbers are still very high, steady increases since 2004. Now, the days to sell increased by 24. So it took us 24 more days to get a home sold in June of 2008 than it did in June of 2007. So one thing that's important to remember, again, we've sold a lot of the homes at the high end that have been on the market for an extremely long time. So that's keeping this number high as well. Now, the total increase between 2007 and 2008 was 24 days and up by 31.6%. Now, the lowest days on the market was 5, and get this, the highest days on the market, 416 days. Lots of homes at the high end as far as just number of days it's taking to get them sold. Most of these are homes with prices that are not set correctly, and we've also got quite a few at the price at the extreme high end that have also been on the market for an extremely long time. And remember, the average days on market for the actives is 131 days. So we've clearly got an inventory that's jam-packed full of homes that need to be reevaluated so that we can get those sold. And these numbers, if you were to come in at a home that's an average priced home from Morgan Hill, this 100-day number I don't think would be realistic at all. I think something in the neighborhood of 60 to 70 days is much more realistic to begin with. You're going to be able to get it sold, and it's not going to take this long. I think a lot of this has to do with folks who may have a little bit of a trouble coming to grips with the idea that they need to be adjusting the price of their home. Now let's go ahead and take a look at the days to sell in previous months. No reason to really get, aside from the weighted number of homes, the high-end homes that have been on the market for a long time, the averages we're seeing are still pretty much on par with what we've seen over the past. If you average out some of these past months. Now, if you look at previous months as a guide, if we go to May of last year and look at the May-June relationship in 2007, you can see there was an increase in the days then as well. You know, and historically, so much of this has to do with simply what we've seen. Homes that have been on the market, when the market tends to rise and get a little bit more hot, you tend to get an increase in the average days on market that's a little bit deceiving because you're getting homes that haven't gotten any attention suddenly getting attention and getting sold when they've been on the market for a long time. You always get a little bit of a bump right here in these months, just because you're finally flushing out some properties that have been on the market forever. Now the days to sell is up 9.9% from May. Not something to worry about. It's at least performing on par with what we've seen in past markets. Or past months, excuse me. All right, now, I appreciate y'all taking the time to listen to what I have to say on these market circumstances. If you'd like to contact me via my website, or if you'd like to read into my other articles on Real Estate Podcast, listen to my other videos, you can find all of those at soldbyrobert.com. Or if you prefer to send an email with any ideas, suggestions, observations, whatever, please feel free to send those to robert@soldbyrobert.com. If you'd like to give me a phone call about anything we've talked about today, including the 25% buyer rebate, give me a call at 408-852-0525. If you'd like to contact me online via instant messaging, you can do that using AOL Instant Messenger, Google Talk, or Yahoo Instant Messenger with my screen name, The Rebel Broker. Skype, and my screen name on Skype is Rebel Broker. And, of course, referrals are always appreciated. If you or anyone you know needs help with real estate in Silicon Valley, please feel free to get in touch with me. I'd be happy to help in any way I can. Thank you very much, and I will talk to you all next time.